Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on with you again.
It's bank earnings season for the second quarter. CIBC, the first out of the gate. How did they do?
Well, on the surface of it looked pretty good. They had growth year over year, but the stock dropped 3 or 4% after the earnings call, and the reason is that between the first quarter and the second quarter, results were weak. And of course, there's all these adjustments they do, and there's a new accounting standard called IFRS 9, and there's a whole bunch of different noise, as they call it, cross currents going on. But when they were asked about the effect of B20, the new guidelines for qualifying for mortgages, on their mortgage growth, they admitted that the second half of the year looks potentially weak. So that's probably what it was. I mean, obviously, with all of the banks, they don't always highlight it in their quarterly reports, but residential lending is the key business that they're in. And with the new qualifying guidelines called B20, it's tougher. The one thing that was not mentioned at least I couldn't find it in the conference call transcript, was declining real estate prices, but that's obviously got to affect them as well, because even if the same number of people are buying houses, if the price is down 20%, as it is in some Toronto suburbs for more expensive houses, therefore the loan is likely to be 20% smaller. So, that's got to have an impact on their growth as well. Now, CIBC is a little bit different from the other banks because, first of all, it's not one of the big three. The people talk about the big five and the big six, but really there's three. There's RBC, TD, and Scotia, and then the rest are significantly smaller. So Commerce is in that second batch. But they're also special because they really put a push on in the Vancouver market and hired a bunch of people that could speak Cantonese or Mandarin, and in one of their quarterly reports about a year ago, they said we're embedded in the community. And that they're an indicator perhaps more of what's happening with lending to non-English speaking people in the Vancouver market, which anecdotally we have found that things are slowing dramatically, especially at the high end.
We're seeing still, though, a lot of action in the condo market.
Yes, the condo market, where people feel that they just, under the new guidelines, they can't possibly afford a single-family home. They've been jumping on the lower-priced ones, and to the point where they push the prices up to where maybe they're not even affordable anymore now. And so, other than the marketing of the brand-new models, the secondary condo market is, with the new prices that are significantly higher than they were a couple of years ago, the used condo resale market, I hear, now this is just anecdotal, it doesn't show up in the numbers yet, but there's evidence that there's a slowdown. Buyers are becoming more reluctant to pay up to the new higher prices. And the similar thing was happening in Toronto. The high-end single-family home, $1 million and up, is really weak, except maybe right in the central part of Toronto. But for a while, the condo market was defying that trend. But eventually, the condo market has to fall in line with the single-family homes, because really, it's all about the land, and there's a lot more land attached to a single-family home than there is to a condo. So if land prices are dropping, you'll see it first in single-family homes, but eventually you'll see it in condos as well.
We'll have more with Hilliard Macbeth right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, oil really doesn't seem to want to go over 72 cents a barrel or $72 a barrel. It'd be nice at 72 cents as a consumer.
That would be nice.
Yeah. So how does that affect things when it hangs around 71, 72?
Well, there's a lot of cross currents. There's an OPEC meeting coming up soon. They don't know what they're going to do in terms of sticking. They surprised me. I think you and I talked about this in the past, and I didn't have a lot of confidence in OPEC's ability to keep oil off the market, but they've either been successful in doing that, or other factors like Venezuela falling apart and different other things going on have really firmed up the oil market, and that was a surprise to me. But what OPEC is very aware of and very concerned about is the fact that all they're doing is providing cover for Alberta oil sands and shale oil producers in Texas and North Dakota just to sell more of their oil when the prices go up that high. So there's definitely no shortage of oil. It's just a question of how much is going to hit the market. And everything that you read about the shale oil in Texas is that those people are just, with technological advances and getting more workers in the area, more investments, they're able to produce increasingly large amounts, and that's a problem not just for OPEC, but it's also a problem for non-oil producers like Canada, where we are shipping now. Canada's trying to ship anyway. If we had pipelines, it would work better. They have to do it by rail car now to a degree, but they're getting close to 4 million barrels a day that are leaving Canada to go to the U.S. Unfortunately, U.S. is our only customer from Canada, and the U.S. is getting more and more successful all the time at finding new technology that'll allow them to produce more oil. Plus, the new administration under President Trump is opening up areas that were previously not available to drill in Alaska and Wyoming and other places, Colorado, that were held off the market by restrictions brought in by George W. Bush and Barack Obama. So there's potentially a lot of new supply on the market. It's probably why the oil price can't get above $72. I did write a piece. I do a weekly note. People are welcome to have a look at it at macbethgroup.com. And all you have to do is sign up. And I did a note on it recently. And one of the things I discovered in my research was that there's often a recession after a spike in oil prices. So we've definitely had a spike. I mean, it went from $30 roughly 2 years ago to $72 now. So there's been recessions after much smaller spikes in oil. But the last 12 recessions, which go all the way back to 1945, 11 of them were preceded by a spike in the oil price. Now, it doesn't mean necessarily that the spike in oil causes the recession. It's just and very interesting correlations, a very high coincidence that you'd have a spike in oil associated with the start of a recession. But the U.S. is kind of overdue for a recession anyway because it's been 9 years. So,
well, apparently too, U.S. oil is having a problem getting out of the country because of a lack of pipeline space there, and all the rail tanker cars are already spoken for. Yes,
I think I'm not an expert here, but I've gotten the impression that the pipeline infrastructure in the U.S. was quite ancient and hadn't really been, it's more of a, free market kind of thing, and especially in the oil industry in Texas and other areas. And there isn't the coordination that there probably is in Canada, where the pipelines are much longer. So they really need desperately to upgrade their infrastructure to get all of this new oil that's being found in West Texas. It's not far from the Gulf Coast. It's, 100, 200 miles or something. So it's not really long pipelines, not like the kind we need in Canada, but somebody's got to figure out how to get that done, and all this new oil. They can move it in the U.S. on barges on the Mississippi River too, as well, which we can't do. But I think the preferred, for sure, is pipelines. And Kinder Morgan actually is one of the bigger companies in the U.S. that is involved in upgrading the infrastructure. The founder, Kinder, left Enron about 20 years ago, and he's been pushing ever since to build the company into a major infrastructure player in the pipeline industry. And that's a danger for the Kinder Morgan expansion. For those people in Alberta that want the pipeline, I know not everybody wants it, but the people that want it, Kinder Morgan has other options available to them for investing their money. And if it gets too tough in Canada, they might just decide to give up on it.
I was just going to ask what you're feeling on the May deadline at the end of the month, where Kinder Morgan says if they're not confident they'll be able to build the pipeline without interference, they're just going to pull away.
Yeah, I'm not, obviously not, I don't have any inside information, but just watching it, you wonder if the company, they've sort of been offering them indemnifications from delays resulting from political maneuvering between BC and Alberta and the federal government. But I don't know if it's financial. I think it might just be that they've got lots of projects available to them, as we were just talking, in the U.S., and maybe they don't need something so complicated as this. But Alberta sure needs it. If the oil industry in Alberta is going to maintain or even, grow for sure, but even possibly just to maintain the current production rate, because almost all of it's exported. It's very dangerous for the Alberta oil industry to be so reliant on one customer, a customer who is finding more and more oil every day, and maybe doesn't need our oil as badly as they used to. So getting access to the new broader markets through Pacific Ocean is really crucial. And so Albertans are really mad because they got that worry, and then on top of that, their second and third homes that they own are being taxed with a speculation tax. So not a happy time between Alberta and BC.
Well, also, too, you have the most bizarre position where BC is suing to prevent Alberta from shipping extra oil to BC, but they're also suing Alberta to not turn off the existing supplies of oil and gas to BC. So they want it and they don't want it.
Yeah, and really it's not a provincial jurisdiction. It's a federal government jurisdiction. I'm sure the federal government is really hoping that they can be sorted out without them intervening, but it really does come under federal jurisdiction, and that's the heavy hand of the federal government. And I don't know, sooner or later they're going to have to make somebody unhappy and somebody happy. But Rick Orman, who used to be the energy minister for Alberta under Don Getty back in the late 80s, early 90s, said they should bring in the troops. So I don't know what troops he's talking about. I guess the federal government troops, but to get that pipeline built. But hopefully it doesn't come to that. But we, for the oil industry to continue to be successful, it definitely needs new customers, and soon. It's not the discount has improved a bit because oil's up to $72, and they managed to figure it out with rail cars and all that. But those are all temporary things, and longer term, probably the oil price is probably more like $40 or $50, and or even lower. And when you pay $15 for the cost of moving oil by rail, which is what it is, you get to the Gulf Coast roughly. That's just way too much. The pipeline, $5 roughly, depending on the pipeline, depending on where it's going. But
do you think it would be a bad deal for taxpayers to actually build the pipeline then? I think the projection was $7.8 billion to build it, but it would make $40 billion.
Yeah, I mean, the pipelines are generally a very safe investment, because usually what they do is they have up front they ask all of the shippers, are you interested? They call it open season, and they all put in their interest. And a little known fact, when they announced the Keystone's still waiting for the phase 3 of the Keystone XL. Still got a routing issue in Nebraska, but when it might not go ahead, because when they asked for the shippers' interest, they didn't get much interest, and it's because what we were just talking about. They'd be shipping oil to a place where there's already more and more oil being found. So, but when they talked about the Trans Mountain expansion to the West Coast, they had huge amount of interest in the open season. There's definitely no risk from the point of view of building it. You're going to have customers, and usually when they finally go ahead, they have a signed contract, so it's not a risky investment. So the taxpayers or whoever does it, investors or taxpayers or whoever, it should be a low risk investment if it gets approved and if it gets built. That's the two big. I guess it's been approved, but if the opposition, let's say, disappears somehow, then it's a pretty low risk investment, and it should be pretty good return.
We'll have more with Hilliard Macbeth right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Hilliard Macbeth. Hilliard, a survey found that 38% of unemployed Canadians say they have given up looking for jobs. Is that a big concern?
Well, when you look at the numbers, now the data's more available in the U.S., but I think it's the same in Canada. There's just a huge number of people that have just given up. They've left the workforce, and the trick that they use in the unemployment data to make it look better than it really is they just eliminate everybody that's given up. So in the U.S. they have several different measures of unemployment. And the one that always gets the highlight is down, I think it's 3% or even lower. It's at a record low. It's, going back 40 years. But if you look a little bit closer behind the data, and this would be true in Canada as well, there's a much smaller participation. So the peak participation in the labor force was 69% roughly of all the people that, of working age. And it's dropped down to something like 63%. So that's a huge change, and that means there's a whole bunch of people who retired early, or if they're past normal retirement age, they don't get counted in that. So they would have had to be disabled or just given up or taken early retirement or something. But the numbers are even worse than that, because it doesn't adjust for the fact that there's a whole bunch of people beyond the normal age of retirement, which is I think 65 or so, that are still in the labor force. So if you actually took them out, the participation rate would be even worse than that. So for people to say that in Canada and the U.S. that the economy is recovered and everybody that wants to work is working is just not correct. There's a whole bunch of people that normally in the 1980s and 1990s and 2000s would have been working are now not working for some reason. And then, of course, the other thing is they don't adjust properly for part-time versus full-time. So obviously there's a big difference between 2 part-time jobs and 1 full-time job with a salary and pension plans and holiday pay and all that kind of stuff. So now the economy isn't fixed yet, and of course, if the housing bubble bursts, as I'm predicting, there's going to be a whole change there, because there's a tremendous number of people, unprecedentedly high numbers of people, that are working in the construction industry and in the real estate sales and marketing industry. Numbers never been anywhere near this high before, that will be looking for other work if the residential housing and slowdown continues and turns into a major correction.
Well, apparently, once your employment insurance runs out, you're no longer unemployed because you're not collecting unemployment insurance. Yeah,
they don't count people that are no longer actively looking for work. So the definition of acting, so the incentive. So this is an interesting little thing I picked up. There's a big incentive for people to at least pretend to be looking for work as long as they're on unemployment insurance, or I guess it's called employment insurance now. Because if they don't show that, then their insurance gets cut off. But then once it expires after a year, or in some parts of the country it goes on longer than that, then there's no incentive for them to keep up the effort to keep looking for work, or at least pretend to be, at least look like they're looking for work. So then they become what they call discouraged workers, or people that have left the workforce. And people legitimately leave the workforce all the time for real reasons, but they don't even track them anymore. So, in the U.S. they do a better job. They actually have a survey where it says, it's something, I don't know exactly how it works, but sort of like something, have you given up looking for work, and all that kind of stuff. So the recovery in the economy should start bringing some of those people back into the workforce. And in the past it has, and you get a huge jump in the number of people looking for work. But we haven't actually seen that this time. So I don't know if it's because the baby boomers are all older, and once they're out of the workforce for a while, they just never come back, or what. I don't know what the reasoning is there, but there is something changing for sure in the whole way it works. And I think the first step would be to get a better way of measuring who's employed and who's unemployed. It's pretty archaic, the one we have now.
Hilliard, thank you so much for chatting with us.
Thank you, Jim. And I just would mention that the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash will be out on June the 9th in your favorite bookstores and online through the various online facilities. So if you're thinking about getting the book, it's so close now, maybe pre-order that one.
Thanks a lot.
Thank you.
I've been speaking with Hilliard Macbeth, author of the book and the second book now, When the Bubble Burst, Surviving the Canadian Real Estate Crash. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.